Hey folks, Simon here with your Tao Daily update for market close Tuesday the 29th of July 2025. And Tuesday saw the major indices pull back a little bit. S&P and Nasdaq both down around 0.2, 0.3%. And bracing for some big events today, Wednesday the 30th of July, we've got Microsoft and Meta both reporting after market. And of course, we've got the FOMC interest rate decision before that. Market sees a 98% chance of no change to interest rates today. It'll be obviously the outlook comments that Powell makes post the meeting and during the press conference that will therefore be of greatest interest. And then when you look at a stock like Microsoft, Microsoft has just had an amazing run. You look at this, not only did it gap up 7.6% following its last earnings report, it has just launched another 25% since then. All right, this is an extreme move for Microsoft, and I tend to think that they're going to have to come up with something pretty exceptional to impress the market from here. Now, if you look at Google, cast your mind back to Google's earnings last week. Google released amazing earnings. It was their report was phenomenal. The market reaction, though, was a little lukewarm. Stock only closed up 1% post-earnings. And I think it was because of the guidance to ever-increasing CapEx. They're spending a lot of money on AI. It's costing them tens of billions of dollars a quarter. And all these mega cap tech stocks are basically in an AI arms race at the moment. I think Microsoft is probably the most important symbol for the S&P 500 right now, and the market's reaction to their earnings really could help set the tone for the next week or two. Okay, it's probably going to be more impactful even than the FOMC result. We've also got Meta earnings. Meta has also had a pretty strong run, although they did collapse 2.5% yesterday. And then once we get to tomorrow, we've got Apple, which really hasn't done anything. And we've got Amazon, which has shown a bit of pre-earnings optimism as well. All right, so once we get through the end of this week, 6 of the Magnificent 7 stocks will have reported, and it's not so much what's in the report, but the market's reaction to the report that we really want to gauge. Okay, if I told you what their earnings were going to be ahead of time, you still wouldn't necessarily know what the stock price was going to do. Take, for example, Visa, which reported earnings after market. The stock beat 5%. Guidance was solid. The stock finished down 3% after market. If we look at SBUX, earnings missed by 24%, but the stock rallied after market by about 4% despite this. If you look at Mondelez, delivered a 7% earnings beat, 2% revenue beat, stock was down 3% after market. If you look at Electronic Arts, they missed earnings, stock was up a little after market. If we look at Avis Budget Group, we got a small beat on earnings, stock was down 2%. If you look at Booking.com, again, earnings beat by 10%, stock was down 3% after market. So looking at yesterday's crop, if you beat earnings, you got sold off. If you whiffed on earnings, you got bid. Which is why I do not like playing earnings roulette. That's what I got for you today, folks. I hope it helps, and I'll catch you next time.